Hello, ladies and gentlemen. Welcome to Cash Crafting Crew, your favorite finance YouTube channel. Today, understand Bitcoin and Ethereum. In-depth technical explanation of cryptocurrencies. Ever wondered why cryptocurrencies, particularly Bitcoin and Ethereum, have taken the world by storm? It's a question that's been on the minds of many, from Wall Street to Silicon Valley, from the bustling markets of Shanghai to the quiet corners of academia. In the span of a few short years, cryptocurrencies have gone from a fringe concept to a global phenomenon. They've been hailed as the future of finance, a technological revolution, and a new kind of digital asset. But what exactly are they? And why have they captured such widespread attention? At their core, cryptocurrencies are digital or virtual currencies that use cryptography for security. Unlike traditional currencies, they're not issued by a central authority or government. Instead, they're decentralized, operating on technology called blockchain, a distributed ledger enforced by a disparate network of computers. Now, when we talk about cryptocurrencies, two names invariably come up: Bitcoin and Ethereum. These are the two heavyweights of the crypto world, the pioneers that blazed the trail for the hundreds of other digital currencies that have followed. Bitcoin, the first and most well-known cryptocurrency, was created in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto. It was a new kind of money, one that could be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. Ethereum, on the other hand, was proposed in late 2013 by Vitalik Buterin, a programmer involved with Bitcoin. It went live on July 30th, 2015, and while it shares some similarities with Bitcoin, Ethereum distinguishes itself with its smart contract functionality, which automatically executes transactions when certain conditions are met. These two cryptocurrencies have not only reshaped our understanding of what money can be, but they've also sparked a global conversation about the role of traditional financial systems and the possibilities of decentralized alternatives. So, why are Bitcoin and Ethereum so fascinating? Well, it's not just about the potential for high returns on investment, though that's certainly part of it. It's also about the technology underpinning them, the ideals they represent, and the challenges they pose to established norms. Let's dive deeper to understand the technicalities that make Bitcoin and Ethereum the giants of the crypto world. Bitcoin, often referred to as digital gold, has revolutionized the way we perceive money. This isn't just a catchy phrase or a metaphorical comparison. Bitcoin has indeed become a game changer, a new form of currency that has taken the world by storm. But what exactly is Bitcoin, and why is it often compared to gold? Born out of the financial crisis of 2008, Bitcoin was created by an unknown person or group of people using the pseudonym Satoshi Nakamoto. At its core, Bitcoin is a decentralized digital currency without a central bank or single administrator that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. What sets Bitcoin apart from traditional currencies is that it's not controlled by any government or institution. It is purely powered by its users and their collective belief in its value and utility. Now let's delve a little into the technical aspects. The technology that forms the backbone of Bitcoin is called blockchain. A blockchain is a chain of blocks where each block contains a list of transactions. It's like a public ledger that records all Bitcoin transactions that have ever taken place. This ledger is maintained by a network of computers known as miners, who solve complex mathematical problems to validate transactions and add them to the blockchain. This process is known as mining. One of the most intriguing aspects of Bitcoin is the limit of 21 million. Yes, you heard it right. There will only ever be 21 million Bitcoins in existence. This artificial scarcity is one of the reasons why Bitcoin is often compared to gold. Like gold, Bitcoin is also mined, albeit digitally. And just like there's a limited amount of gold available on Earth, there's a cap on the number of Bitcoins. This limit was set by Satoshi Nakamoto and is ensured by the Bitcoin protocol itself. Once the 21 million Bitcoin limit is reached, no more Bitcoins can be mined. Currently, we're a little over 18.5 million Bitcoins, meaning we're close to hitting the cap. And this scarcity is part of what gives Bitcoin its value. Yet Bitcoin is not just a store of value or a way to make transactions. It's a new kind of financial system. It gives power back to the people by allowing for peer-to-peer transactions without the need for a middleman. It's transparent, secure, and operates 24/7. It's not just digital gold, it's a whole new way of thinking about and using money. Bitcoin has indeed set a new standard in the financial world, but what about its closest rival, Ethereum? While Bitcoin redefined money, Ethereum took a step further. It is not just a cryptocurrency, but a platform. This platform was born from the mind of a young computer programmer named Vitalik Buterin. In 2014, Buterin proposed a new platform that could do more than just process financial transactions. He envisioned a blockchain-based platform that could process a wider variety of tasks in a decentralized way. Thus, Ethereum was born. Ethereum's key innovation is something called a smart contract. Now, you might be asking yourself, what's so smart about this contract? Well, a smart contract is a piece of code that automatically executes transactions if certain conditions are met. It's like a vending machine for the digital world. You put in a digital token, specify your desired outcome, and the machine does the rest. But unlike a vending machine, smart contracts can handle much more complex transactions and can operate without any human intervention. But what makes Ethereum truly special is the way it enables decentralized applications, or dApps for short. These are applications that run on the Ethereum blockchain, free from the control of any one entity. This decentralization brings about a level of transparency and security that is unparalleled in the traditional centralized systems. From games to financial services, the possibilities for dApps are virtually limitless. Now let's talk about the key differences between Bitcoin and Ethereum. While both are based on blockchain technology, their utility and purpose vary greatly. Bitcoin was designed primarily as a digital currency, a new kind of money that operates independently of traditional banking systems. Its main goal is to serve as a store of value and a medium of exchange. On the other hand, Ethereum is more than just a digital currency. It is a platform for building and deploying smart contracts and decentralized applications. Its native cryptocurrency, Ether, is used to power these applications and to incentivize the network's participants. Ether is like the fuel that keeps the Ethereum engine running. Moreover, while Bitcoin's supply is capped at 21 million coins, Ethereum has no maximum supply limit. This is because Ethereum was designed not just to be a store of value, but a utility token that facilitates transactions within its ecosystem. Another key difference lies in their consensus mechanisms. Bitcoin uses a system called proof of work, where miners compete to solve complex mathematical problems to add a new block to the blockchain. Ethereum, however, is transitioning to a more environmentally friendly and efficient system called proof of stake, where validators are chosen to create new blocks based on the amount of Ether they are willing to stake as collateral. In terms of speed, Ethereum's block time is significantly faster than Bitcoin's. This means that transactions on the Ethereum network can be confirmed more quickly, making it more suitable for applications that require faster transaction times. In conclusion, Ethereum represents a significant evolution in blockchain technology. It transcends the concept of digital money to offer a platform where anyone can create, deploy, and interact with smart contracts and decentralized applications. Both Bitcoin and Ethereum have their unique strengths and uses, but what does this mean for potential investors? Stick around as we delve into the investment angle in the next scene. The rise of cryptocurrencies has opened up new avenues for investment, but with it comes considerable risk. With the advent of Bitcoin and Ethereum, the financial landscape has been forever changed. We're now in a world where digital currencies are not only possible, but are becoming increasingly prevalent. This new frontier, while exciting, is also fraught with volatility and unpredictability. Cryptocurrencies are notorious for their price volatility. One day you might see your investment skyrocket only to plummet the next. This wild west of finance is not for the faint-hearted, it's for those who can stomach the roller coaster ride, who understand that the peaks and troughs are part and parcel of this new investment landscape. But remember, with high risk can come high reward. The meteoric rise of Bitcoin and Ethereum has made millionaires out of those who had the foresight to invest early. However, it's essential to remember that past performance is not indicative of future results. The crypto market is still in its infancy, and predicting its trajectory is as much an art as it is a science. Before you venture into this volatile world, arm yourself with knowledge. Understand the technology behind these cryptocurrencies. grasp the principles of blockchain, the revolutionary technology that underpins them. Know the difference between Bitcoin and Ethereum and the unique value proposition each one offers. Understand the market trends, the regulatory environment, and the factors that drive price movements. Moreover, the crypto landscape is rife with scams and fraudulent schemes. From Ponzi schemes to pump and dump operations, the lack of regulation makes it a fertile ground for fraudsters. Always be wary. If something sounds too good to be true, it probably is. Do your due diligence before you part with your hard-earned money. Investing in cryptocurrencies should never be a spur-of-the-moment decision. It should be the result of careful consideration and thorough research. Understand the risks involved and only invest what you can afford to lose. Remember, the value of your investment can go down as well as up. Cryptocurrencies are not just a new form of money. They represent a paradigm shift in our understanding of what money can be. They have the potential to disrupt traditional financial systems and create new ones in their place. But as with any investment, there are no guarantees. The world of cryptocurrencies is a complex and rapidly evolving one. It requires a level of understanding and tolerance for risk that not everyone possesses. So if you're considering dipping your toes into the crypto waters, remember this: knowledge is power. The more you understand about cryptocurrencies, the better equipped you'll be to navigate their turbulent waters. Remember, an informed decision is always the best decision when it comes to investing. Cryptocurrencies have made a significant impact, but what does the future hold for these digital assets? As we step into the future, the path of Bitcoin and Ethereum seems to be as mysterious as the technology that underpins them. Yet there are a few scenarios that are worth considering. Let's dive into the virtual ocean of possibilities that await these digital currencies. Firstly, let's discuss potential regulation. Governments around the globe are starting to notice the influence of cryptocurrencies. Some are embracing them while others are wary. In countries like Japan, cryptocurrencies are already recognized as legal tender. Conversely, other nations are imposing stringent regulations, driven by concerns about money laundering and financial stability. Looking forward, it's likely that we'll see a global push towards a regulatory framework that ensures transparency and security, while still fostering innovation. Next, let's consider the adoption of cryptocurrencies by mainstream financial institutions. Banks, hedge funds, and pension funds have traditionally been cautious about investing in cryptocurrencies, citing their volatility and lack of regulation. However, this is beginning to change. Major institutions like Fidelity and JP Morgan are already offering crypto services, and it's not far-fetched to imagine a future where digital assets are as commonplace in these institutions as stocks and bonds. The third scenario revolves around technological advancements. Cryptocurrencies like Bitcoin and Ethereum aren't static. They're continuously evolving through a process of technological innovation. For instance, Ethereum is transitioning from proof of work to proof of stake, a change that will make it more scalable and energy efficient. Similarly, Bitcoin is seeing advancements like the Lightning Network, which aims to increase transaction speeds. These ongoing developments could significantly impact the future trajectory of these digital currencies. It's also worth considering the broader societal implications of cryptocurrencies. As we move towards a more digital world, the idea of decentralized, borderless money is becoming increasingly attractive. Cryptocurrencies could play a key role in global remittances, financial inclusion, and even political dissent. In this sense, the future of Bitcoin and Ethereum could be intertwined with the future of society itself. However, it's important to remember that these are just possible scenarios. The future of cryptocurrencies is shrouded in uncertainty, shaped by a multitude of factors that are impossible to predict with certainty. Market dynamics, technological developments, regulatory changes, societal trends, all these and more will play a role in determining the path that Bitcoin, Ethereum, and other cryptocurrencies will take. As we stand on the brink of this digital frontier, it's exciting to ponder the possibilities. Will cryptocurrencies become a staple of our financial system? Will they revolutionize the way we think about money? Or will they fade into obscurity, remembered only as a curious experiment in decentralization? The future of cryptocurrencies is uncertain, but one thing is clear: they have forever changed our understanding of money. Let's recap the main points we've covered in this video. We started off by delving into the crypto conundrum, exploring the complex world of cryptocurrencies. We examined the revolutionary technology behind them and how they've managed to turn the traditional notion of currency on its head. We understood that cryptocurrencies like Bitcoin and Ethereum are more than just digital assets. They're a radical new way of thinking about finance and the economy. Next up, we dived into the specifics of Bitcoin, the pioneer of cryptocurrencies. We learned that it's not just digital money, but more like digital gold. Its decentralized nature, limited supply, and the blockchain technology behind it make it a unique asset. We saw how Bitcoin has the potential to act as a hedge against inflation, just like gold. Then we moved on to Ethereum, which we discovered is more than just money. It's a platform that enables smart contracts and distributed applications to be built and run without any downtime, fraud, control, or interference from a third party. Ethereum's currency, Ether, acts as a facilitator for this process, making the Ethereum network a lot more than just a digital currency platform. From there, we shifted our focus to the investment angle of these cryptocurrencies. We discussed that while they offer significant potential returns, they are also highly volatile and risky. We explored the concept of diversification and the importance of doing thorough research before jumping into crypto investments. Finally, we looked at the future of cryptocurrencies. We discussed how they have the potential to revolutionize various sectors from finance to supply chain to healthcare, and could even influence governmental structures with their decentralized nature. Cryptocurrencies, especially Bitcoin and Ethereum, are complex but fascinating. Understanding them can open up new frontiers of knowledge and potentially investment opportunities. We hope you liked the video. If so, it would help us a lot if you left us a comment, since the YouTube neural network values this very much and thus recommends our videos to more people. Give it a like and activate the bell so that you receive a notification when we upload our next video. So see you soon. Greetings.